Hello friends, today we're going to be talking about what companies are out there buying single-family homes. Has there really been a run on companies out there buying single-family homes? Well, by the end of this video, you're going to have a clear understanding about which companies are actually out there buying single-family homes, the strategies that they use, and how this affects the housing market in today's current economy. Have you ever wondered why housing prices have soared over the last few years? Is the fact that large organizations are out there buying single-family homes playing a role in the prices of homes going up? Well, stay tuned as we answer these questions by first explaining what companies are actually buying single-family homes. Then I want to explain to you why they're actually buying these homes. And finally, I want to explain how this affects the market for you as an investor. If you're ready to dive in, let's get to it. So the rumors have been running pretty rampant about these large institutions and companies purchasing single-family homes. But how do we disseminate what's fact, what's fiction? And I'll be the first to tell you, there's a lot of conflicting data online when you start researching and looking into this. So let's discuss that for a minute. When people hear these rumors, a lot of times they go to the three largest institutional investors on the planet. And those three companies are BlackRock, Vanguard, and State Street. And these organizations have their hands in everything. They manage trillions of dollars. They've got contracts with governments, with the largest corporations out there. They have stakes in some of the largest publicly traded companies like Apple, Microsoft, Nvidia, and others. Are these three large behemoths really buying single-family homes? Well, according to BlackRock's own website, they are saying that they are not actively buying single-family homes. However, they are investing into companies that are building homes, construction companies, as well as mortgage organizations that are providing funding and mortgages for these single-family homes. So as I did some research, I went and found what companies are actually buying single-family homes and how many do they own. And here are the top 5, and they do own a significant amount of single-family homes. Number 1 on the list is Progressive Homes, and they own 85,000 single-family homes. Number 2 on the list is Invitation Homes, and they own 83,000 single-family homes. But one interesting thing about Invitation Homes is BlackRock and Vanguard both have stakes in this company. Now, as I mentioned, BlackRock directly isn't buying the single-family homes, but Invitation Homes, who they have a stake in, is actively buying single-family homes. Number 3 is American Home for Rents, and they own 59,000 single-family homes. Number 4 is First Key Homes with 50,000 single-family homes owned. And finally, Amherst Holdings with 40,000 single-family homes owned. Now, on another note, the reason the news might be confusing about a company called BlackRock is there is a private equity company called BlackStone, and this company has been gobbling up single-family homes. And they do have a major stake in Invitation Homes. So why are these companies and institutions, private equity companies, buying up so many single-family homes? I mean, some of the scariest data out there said that by 2030, these institutions could own 40% of single-family homes. Now, there's a lot of different ways to go about this data, but I'm a little bit skeptical about the answers that come from institutions themselves. So let's do a deeper dive into some of these questions. I think first and foremost, we got to understand that if single-family residences are good investments for us, the investor, why wouldn't it be a good investment for institutions? If they see that and they can profit off of it by buying tens of thousands of homes, it could be a good investment for them and their shareholders. And honestly, with the buying power to gobble up tens of thousands of homes, they might be thinking, and this might be a little bit more sinister, but that they can control the price of single-family homes and the rental market. And if they're able to do that, they're going to be pricing the average person out of the ability to purchase a home. Now, probably one of the biggest reasons some of these private equity companies or large organizations are buying single-family homes is that they are diversifying from traditional investments. This is a new asset class. It isn't buying companies. It's buying real estate, which diversifies their portfolio and might make many of their investors pretty happy. You know, I think a lot of them got started in the first housing crisis that happened in 2007, 2008. You had many of these organizations that were pouring lots of money into these really distressed properties. Take Cleveland or Detroit, for example. And they poured money into these broken markets, and as things started to improve, they reaped some amazing returns on doing so. And there's some actual examples of this happening. Take BlackStone, for example. Not BlackRock. BlackStone is the private equity company that does invest in single-family homes and companies that are purchasing up single-family homes. And here's some interesting data. So here's a direct quote about BlackStone cashing in on the real estate market. In 2012, BlackStone, one of the world's largest alternative asset managers, acquired Invitation Homes, which controls more than 80,000 rentals. BlackStone cashed out in 2019 after Invitation Homes went public. In 2021, BlackStone acquired Home Partners of America, a company with more than 17,000 rent-to-own units across the U.S. for $6 billion. So one thing we know about this investment world is it is a copycat world. So if BlackStone was able to cash out big time by taking a company public, or another organization, a private equity company that was buying homes and had big organizations stake in their company, other people are going to start to do it. So this could also be another reason why many of these companies are purchasing single family homes, because of the return on the investment that these organizations are getting when they take these companies public or when they sell to another larger institution. So how does this affect the market for you as an investor? Well, it could spell opportunity if you're willing to jump into the single family home market and acquire some single family rentals and build up a portfolio, whether it's you and some partners. And if things do start to happen like they think, by 2030, the rental prices could really start to rise, and you could be poised to be in a really good position of receiving maximum rent for the properties that you own. So another thing to take advantage of the market, and if this really is happening like they say it is another strategy that I'm actually doing myself. If you think about it, if you were part of that movement in Detroit or Cleveland where these organizations were buying up homes in broken markets, could you find other broken markets that might need some single family homes invested? That's what I'm trying to do right now, is I'm out there looking in the Midwest for homes that are between $30,000 to $80,000. Now, when it was Detroit and Cleveland back then, there was homes being gobbled up for $5,000, $6,000, $7,000, $8,000, which is crazy to think. And that's why a lot of these companies really cashed in, because they held these properties, probably had the funds to fix them up, and really cashed in as the government dumped lots of money into these inner cities to build up some of these broken communities. You might not be able to find that, but if you're able to find properties in the Midwest, $30,000 to $80,000, you could take advantage of this by getting renters in there. Now, one thing that I'd caution you, that I'm definitely looking at myself, I don't want to be buying homes in really crime-ridden areas. That could be dangerous. So I always go online and I look at crime data around the cities that I'm buying these. And I might just be on the outskirts. Like take St. Louis, for example. St. Louis is a city where there is higher crime than a lot of other major cities. However, there's a lot of good deals in St. Louis and around St. Louis. And if you're just on some of the outskirts there where you're not really in those bad areas, you could take advantage of lower prices and obviously get people in there that are renting that don't want to live in the inner city but are willing to pay rent because it's in a nicer place. So that's one strategy that I'm currently doing. And as I start to look throughout the United States, I can find pockets in almost any state, I should say almost any state, where prices are below $100,000 for a home. And if you take advantage of that, if you negotiate really well, I mean, when I make offers on homes, I am probably looking at a ratio of 1 out of every 20 homes that I put an offer on will be accepted, right? That's because I'm offering really low prices, but I'm trying to find homes that don't require a lot of work to get into. So those are some things that I'm doing to take advantage of this news about these organizations buying single family homes. But I'd be interested in what your thoughts are. What rumors have you heard? Please comment below. Let's engage in a discussion. And as always, just for stopping by and watching the video, I've got a free gift for you. It's aaronsfreetraining.com. Just go ahead, click on that link. It is a short-term rental calculator. You put in the purchase price of the home, the income that comes from it, the expenses, and it spits out to you whether it's a good deal or not. And it's 100% free, no questions asked. And once again, thanks for stopping by. Have an amazing day.